Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is Monday, November 28th, 2016, and this is the Daily Report for Gold and Silver. We have a nice rally underway in the precious metals markets. Gold trading up about 1.25% on the day. Are we witnessing a turn of the tides, a trend reversal, or simply a consolidation? Obviously, that will be the primary topic of today's show. And we also sent out a trade recommendation yesterday, initiating a long position in gold. We will talk about that in detail all on today's Daily Report. First, to the markets. Gold closing up about $15 when we look at gold futures. 1193.10, up $14.70, a rise of 1.25%. The low on the day has been 82 and the high is 97. Now, in contrast to what we normally do, our futures markets that we look at are a continuous contract. So in this particular case, we're still looking at December, and December is really set at expiration, third week of November. So those that took on the trade are going to be trading futures in terms of the contract month in February. February gold, which is at 1196, also up about $15, with a high of $1,200 per ounce and a low of $1184. We'll talk about the distinction in a little bit, but first let's take a look at silver prices. Although gold climbed, as I said, 1.25%, silver is also up, but up about 0.75% at $16.59, putting it up about 12 cents on the day, or a net change of 0.75%. The low on the day is 16.43 and a high of 16.85. When we look at spot is going to be very, very similar to what we saw when we looked at continuous futures contracts, because those have come into alignment. We've got spot gold at 1193, and when we look at spot silver, that is trading at 1661. Let's take a look at our first chart. So traders, the first chart that I do want to look at on today's forecast is a daily chart. This is our continuous contract of futures, COMEX gold futures, up about $14, closing at $1192.50. Yesterday, I did put out a trade alert, and we did issue it for a couple of reasons. First and foremost was the fact that when we looked at this market trading on Friday, it was trading lower, trading substantially lower, but it had an intraday low which absolutely matched the 61% retracement at 1169. And that, of course, is a 61% retracement of the move that we have seen from the lows hit this year at around 1040 up to the highs at 1380, and then the subsequent drop. Now, that being said, just because we hit this low, I needed to see some sort of a bounce to the upside. We certainly got that yesterday. Now, when I put out the actual price alert, or trade alert, I should say, the market was trading about $3.50 higher. It was trading at about 1196. That would be, of course, basis the December contract. And of course, if you are taking on the trade and you are trading COMEX futures, you'd want to be in February. So you got in roughly at 99. Market, again, is about $3 lower than our entry price. But the thing that we want to realize is that I'm looking at this as really a much longer term trade than normal, because my sense is this: if in fact we were able to kind of catch this knife falling through the air, a hot knife falling, and we're trying to catch it, because this move down is certainly a sharp knife falling quickly. If we're going to try to bottom pick this particular market, we had an absolute game plan, and the game plan was to first look to see how it would react at a 61% retracement. Well, we got that. And we have our stops sitting below this particular price point. In other words, all stops should be below 1170. And that, of course, is basis this December contract. We will correlate that when we put up stop placements onto our members page for February. But the key is this: you want to keep your stop below this particular lows that we hit on Friday, because my sense is that if we do get a key pivot or reversal, such as we've gotten here, such as we got here, such as even we got here, then we could see this market track higher. And I would look for, initially, we'd want to see it. Obviously, the first step is to see it move back above 1200. And then if we absolutely see that, because we do have some historical data which provides this price point being supportive, we would then look, the next real strong area of contention wouldn't be till about 1250. So my sense is that if we're in just under 1200, we could be able to capture a $30 to $50 profit off of this trade. So traders, I've just pulled up a very short-term chart, this being a standard candlestick chart, and each candle represents about 4 hours of trading, a 240-minute chart. That's what we're looking at right now. And we can see that here is the presidential election of Donald Trump. This is the knee-jerk reaction, taking it about $50 higher. This is the subsequent decline that comes following that. A couple of areas of consolidation, then drifting to lower pricing. So if you look at these series of lows on a 240-minute chart, you can see that we do have a series of higher lows as well as a series of higher highs, not consecutive, but overall. We also had our first real level of resistance, which came in roughly at about 1200 basis February's contract. So that's our current resistance, is 1200, and we are seeing this series of higher lows. And to me, that tells me that we have a real decent probability of success on our current trade. And traders, lastly, do want to take a look at silver, this being a weekly chart. Now, if you recall from our opening statements, we had gold closing up about 1.25%. We had silver closing up only about 0.75%. So a big difference between the percentage gain on the day, whereas silver would typically be the percentage leader on an up day, percentage drawdown on draw days. It tends to move more volatilely. We are certainly not seeing that today. And we have pointed out that there's been some key distinctions or differences between the way silver's been trading and gold has been trading. Silver's been less of a safe haven and more of an industrial metal recently, whereas gold continues to be the safe haven play in terms of a precious metal. Now, when we look at this on a weekly basis, yes, we are still trading above this 61% retracement, which comes in at 1652. But we didn't get the kind of clip that we would like to have seen. However, there's a caveat with this, and there's also something that I'm going to be looking for, and that is if we have a good recovery this week, which means gold's moving higher and silver's moving higher, we would see this candle right in here form, and what we could see the outcome be would be a variation off a pattern called a three-river morning star. If that's the case, you would then want a confirmation on the following week, and that would give us a real solid idea that, yes, silver, along with gold, has hit a potential bottom, and what we've witnessed in most recent events has been a key reversal. For right now, we are sidelined on silver, we are long on gold. Maintain your current long position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.